Today we're talking about fixer-uppers and investment properties on short and long-term rental. I'm Andrea, this is Raul, and we're with the Schrader Group. What is a fix and hold?
All right, so fix and hold is something where you find a property, it might be a little distressed, but your intention is to hold it and let the market value increase over years, but have somebody else pay that bill or that mortgage for you.
Okay. When shopping for an investment property, what do you need to consider the most?
Well, you want to see what your strategy is going to be. I think essentially you don't want to lose money on the deal, right? So you're going to put some money into it, but make sure it's not too much, and make sure you don't price yourself out of the market. But it just really depends on what the strategy is. I think that there's a couple different ways you can do it. You can rent it, or you can do an Airbnb or a vacation rental by owner.
So what do you need to consider if you're going to do a short-term lease? Like
Short-term,
Airbnb?
yeah. So if you're going to do a short-term, you definitely want to make sure that whatever your monthly obligation is, and when I mean that, I mean your mortgage, right? Your insurance. You're also going to think about someone else is going to be using your electricity and your water, and you're also going to have to get the cable set up. So you want to kind of make sure that you have all that in play. And that's more for Airbnbs and VRBOs. But if you're going to just do a rental, obviously you just need to make sure that your monthly obligations are covered with taxes and your mortgage.
So that would be a long-term?
That would be a long-term plan, correct. Mm-hmm.
Is there a general rule how much an investor should pay for a property?
Yeah, so there's a couple different methods. There's a 1% rule, which you're supposed to acquire the property, and 1% of that is what your rent should be. Okay. Now, that method used to be amazing, and everyone used to love it. The problem is home values have gone up so much that 1% rule is kind of hard to meet. The average right now in San Antonio is about $1,950 on rentals for homes right now. So if you think about it, that's like saying you got to buy a $195,000 home and try to get $1,950 for it. Depending on the neighborhood, depending on the side of town, it might make sense. But we might have to adjust those numbers because taxes have also gone up because the house values have gone up. Not necessarily because the taxes went up initially, it's just the values have gone up to which it kind of offsets that 1% a little bit. But I think if you could get it anywhere close to that, I think you're going to be all right.
Can you finance an investment property if you don't have the cash for it?
Yeah, absolutely. So, I mean, you could always finance anything. Now, when you have a primary residence, your investment property is probably going to be about 20% down. A lot of investors will go in there and look at that, and they'll do what's called the BRRRR method, where you buy, you rehab, you rent, then you refi it, right? Because you get your money back, and then you repeat, right? So that BRRRR method allows you to go in there, find a property, put some, new paint on it, new flooring on it, make it look great, rent it out, and then refi it, pull out your equity, you do a cash out refi, get that money, go put it in another property, and just kind of wait for the equity just to build over time and let somebody else pay for it. So
how can a realtor help in this situation?
Well, number one, knowing your market, your area, stats to see what the rents are going for. So a house in Stone Oak might rent traditionally a 2,000 square foot home might get $2,200, where on somewhere on the opposite side of town, it might only be a maximum of $1,700, $1,800. So you just want to kind of see what's going on there. But also an agent could kind of come in here and tell you, well, hey, look, year over year, the historical values have gone up 6%. But on two different sides of town, it might be 8 or 9% on the Stone Oak one. So you're able to maximize as your numbers go up. You can honestly see what your valuation will be and how much more investment dollars you'll make. Because at the end of the day, if we're not making money on our investments, it's not worth it.
Well, we hope this helped you out a little bit. And if you have any questions or you're interested in doing this, please let us know.